talk a little bit more about the mutual fund industry, find out Aditya Birla Sun Life AMC's NFO, and discuss a lot more. We've got with us Mr. A Balasubramanian, the MD and CEO at Aditya Birla Sun Life AMC, joining in. Thank you so much for taking time out, Bala. Good to have you on board as always. I just want to understand and start off a little bit about telling us a little bit more about this NFO and what kind of a role the entire distribution space has played in helping it become a success. What kind of the contribution have we seen from digital partners?
Well, of course, thanks for the opportunity. I think the NFO had a good success. We had highest ever collection from any of the NFO that we have done in the last number of years through the Quant fund, which is nothing but a diversified equity fund, which invests in a mix of large cap, mid cap, and small cap. But the stock selections are driven by the model that has been built using machine and the involvement of money managers. This is being managed by Harish Krishna, who is our co-CIO equity. And he'll be managing the fund along with another gentleman who comes with technology background. So we had a huge success. We had, of course, after seeing multiple roadshows, we collected close to about 2,500 crores of AUM. I mean, in excess of 2,400 crores. And coming from about 1,20,000 for investors, and coming from about 13,000 roughly is the pin code, so which is nothing but reflection of the wider participation coming from across the country. At last, the wider participation coming from the distribution community, both from MFDs, the organized channels, as well as digital channels. We have seen a widespread participations coming in the schemes. This I see as two things. One, of course, the reflection of the conviction on investing in equity on a continuous basis by investors. Second is Aditya Birla Sun Life Mutual Fund commitment to keep building the assets by way of promoting new products which are suitable for the customers, as well as delivering the best possible investment experience in our existing schemes, a combination of multiple things. And finally, add value to the both the distribution partners across the country as well as the investors on a continuous basis, that the deep commitment that we have to build the mutual fund industry, as well as the commitment that we have to build Aditya Birla Sun Life Mutual Fund AUM on a continuous basis, and so that we are able to serve more number of distribution partners as well as investors. So that's been a good success. We just closed it last week, and happy to share this with all of you.
Bala, congratulations. Good job by the team, clearly. I want to talk to you about one of the recent kind of news from the regulator's side, which may not directly impact you, but some strategists in the markets actually believe that it could be a positive for asset managers and AMC such as yours. SEBI's blow to discount brokers in the form of uniform charges. Is this the right way to look at it, that eventually normalized charges will actually be perhaps end an era for zero cost and all of that, but for asset managers, more steadier flow? People would realize that asset management companies and wealth managers are the right way to participate in the market for the long term.
Definitely, I think the AMCs would play a very larger role in serving the growing needs of the customers. In fact, one of my friend also asked me, should I go into the market directly and investing in direct equity market, or should I come to the mutual fund? And the preference was more towards mutual fund, not because of anything else. The diversified equity portfolio that you create, and over a period of time, the experience is good. When you actually dabble yourself with the market directly, you'll always see various ups and downs and so on and so forth. So the recent regulation coming from SEBI, especially the broking firm related, of course they would have looked at it, what is the cost somebody is paying, which is linked to the volume that they have. The more the volume you do, the more able to charge and so on and so forth. So I think this is what they are bringing, uniformity and transparency. And mutual funds, in fact, have always been an extremely transparent vehicle for the investors to put their trust, and heavily regulated, heavily disclosed in terms of portfolio manager, the portfolio construction strategy, as well as risk management practices in the mutual fund industry is far higher than any other industry if you see it in a very close manner, if you see it. So I think from an investor's point of view, definitely asset management would be the larger vehicle in which they should put. Of course, whatever they do in addition to investing in mutual fund, should always only a small portion of that. The larger component, my own belief is, would have to come to the mutual fund, given the advantage that they get in the mutual fund space. I think, as you rightly said, the mutual fund would always remain in the forefront from the investors' point of view and continue to be in the growth path, given the fact that more and more people are realizing investing in mutual funds would probably the best way to save the money, and that too through the SIPs.
Okay, let's move on and talk about the markets then. How are you looking at the valuations? Several of the big brokerage, big AMCs till some time back had a view that small cap, mid caps are getting frothy. Even Amphi came out with a study of its own. Has that got adjusted now? Some of them are coming back to the market in small caps and started taking funds back again.
So I think there has always been a discussion debate where the industry level we discuss and individual fund house level we look at. Because we as the fund house have always been bullish on broader market, both covering large cap, mid cap, and small cap. And we always believe that valuation is something you cannot generalize it for the broader market. It has to be more stock specific, sector specific. Therefore, you'll find always opportunity to invest in the small and mid cap space. Given the fact that there has been a widespread interest is getting generated across different segment of the market, even as the economy growth is becoming more and more wider. That is being the case, we never stopped it, and we continue to stay focused on stock picking. But having said that, market valuation is something is a debatable point. What was said and done at close to about 17,000 index, having an argument on valuation being high is nothing illogical in that. There is a logical assumption that one can make. But having said that, we need to also look at it, how fast the country will grow in terms of as we move forward in the next 5 years. As long as the growth expectations continues to remain strong, as long as the buoyancy continues to remain on the broader economic growth expectations, as well as the support system, which basically the interest rate continues to remain conducive for somebody to pursue investments in various sectors from the point of view of generating ROE, I don't think we should worry too much about the valuation. Market will always provide an opportunity. So as I speak today, there are sector rotation happens, right? I think there are certain sectors have undergone a tremendous underperformance of the broader market, and it is catch up. Therefore, we always find opportunities on sector rotations, and we find opportunities within the space on a comparable basis. You find better valued companies and so on and so forth. Therefore, it cannot be just generalized it that valuation is something is high, therefore you can't invest. But that's something individuals have to take a call purely on the basis of where they can draw comfort on individual stocks or individual sectors.
Right. So Bala, for those retail viewers who are watching this interview right now and are still looking at putting some fresh money to work, what should be the classification in their portfolio and the distinction between debt as well as the equity exposure, and of course within equity as well, would you say have a higher allocation to large caps right now?
I think the way as it stands today is first and foremost any investors who are sitting in the funds, I think should take an entry into the mutual fund, to the balanced advantage fund or multi-asset allocation fund, which invests in across all asset classes. That's an entry point. Second, of course, as it stands today, large cap, flexi cap would form the large component of the portfolio, which is roughly about 40-50% would go into that segment. And anybody who actually has a relatively higher risk appetite should look at a small cap and mid cap from a 5-year time point of. I think what is most important in each of these asset classes, what is the holding period that you want to look, what you look at, you'll be comfortable holding it, so that you can actually weather through all the volatility that will come on the way in a better manner. That's why I think one should look at small and mid cap from a longer term point of view. Clearly, as it stands today, the entry should be taken through the hybrid funds, multi-asset allocation fund, and balanced advantage fund, and of course the large cap fund.
Right, Bala, such a pleasure having you on the show today. Thank you so much for joining in, and congratulations once again.
If you like this video, then like, share and subscribe to ET Now.